folks, Dan Frio here, the Mortgage Update. Today is April 1st, 2020. So no April Fool's jokes. I didn't even prep for this. I could have got you, but no, I won't. There's enough chaos in the market going on right now. So great, actually starting to get good news in the mortgage market. Okay, so we're going to go through some charts here, and then I'm going to go through a quick little article with you to show you that there's some stabilization in the markets. And like the video says, let's get ready to lock, because I put off a lot of my clients in the last probably week or two. We had record low rates about 10 to 15 days ago. Then all of a sudden the market just completely turned and it was a mess. You can look on like some different websites like I did about a week or so ago. And I looked at my rates, and my rate was like at the time like 4%, and everybody else's was 5.5%. And then all of a sudden we start creeping up. And because basically what we try to do is shut off the volume temporarily, because there was a bunch of chaos in the markets, as I explained to everybody. And plus there was so much business we couldn't keep up. So, you know, we're in all the clients that I have now, thanks for your patience. I was blessed that I had, you know, a lot of responses to my videos and my radio shows and everything else. And so we kind of have record volume right now, and we're trying to catch up to those numbers. But finally we're caught up. We're about 2 days behind in processing now versus we were about 2 weeks behind in processing now. So if you have a mortgage with us, please don't go anywhere. We're doing our best to get you taken care of. 90% or 95% of our clients probably locked in at the lowest rates ever in history. So there's no need to try to go somewhere else, because it's going to take you about 2, 3, 4 weeks to close there anyways. I'll have you closed by then, and we've already locked you in. We locked everybody in at the time on 60-day locks. Thank goodness, it was a blessing. But what's happening now? Again, let's get ready to lock, because the markets are starting to stabilize. And the Federal Reserve just came in and kind of lowered some restrictions on banks. I hope it's temporarily, because I don't want to go back to what happened in 2008, 9, and 10, where there was over leverage. But right now, kind of everybody's basically turning every rock over that they can to stabilize the economy and not feel the pinch as much as it should be. So some numbers that came out today was employment numbers, and they actually weren't as bad as everybody thought, but we're going to throw out that number, because there was an article over here that I looked up, and it says MBS day ahead, data doesn't matter. Oh, it will. It will eventually, but right now it doesn't. Because I'm saying still it doesn't matter, because we all know everything is a train wreck. The economy out there is a train wreck. So what happened today? Well, it was a sporadic day. Let's go to my chart. You're going to see right here the market on this database shows it ended up 5 for the day, but after hours trading I have on this data here, it kept going up to a plus 16. But I go through here because it's just a lot easier to see. So, we still have an uptick from when it closed here to when it closed here. So again, a 5 tick here to a 16 tick here. Okay, for those new to the channel, thanks for tuning in. I hope you found me through, the Fed Watch and forbearance agreements and videos like that I did that are really taking off. And if you didn't view that, please, try to check out forbearance agreements. Are they a good thing? And you're going to be surprised. And I hope you share that with friends and family and relatives, because I can save you a lot of grief in the months and days ahead. So what we follow on this channel is the mortgage-backed securities market. It's the MBSs. This is a bond that trades. It's a batch of bonds that are put together as mortgages and sold off as investments. And it creates mortgage rates. This is it. This is the number. It's not any of these. It's not the 10-year Treasury. It's not the S&P 500. It is mortgage-backed securities. Okay, as this price goes up, it means you're paying more for a bond. Therefore, you're getting a lower rate of return, a lower interest rate, a lower mortgage rate. So we love when this number goes up, and it's been going up and up and up and up. This is the normal pattern that we normally see. It's up a little bit, down a little bit, up a little bit. We don't see this variation in numbers. We love when the numbers start to come in at like 5, 6, 7 ticks, not 100. So we're starting to get stability. Look at the stability right in here. There really wasn't. It was 102. It's a big range, but we're starting to work in this pattern right now. We're not going over, a bunch of different patterns. So that being said, also the Fed came out and they announced that they're going to start easing temporarily banks' leverage ratios, and that will help stabilize the market as well. Why is this helping? Well, what we've done in the past probably week, is us and a lot of lenders inflated our rates to slow everything down because of the chaos in the market. And now it's time that everybody's caught up. The markets are starting to stabilize. The Fed's stepping in and doing what they need to do. And now might be the time, and it's not today, and it's probably not going to be tomorrow, but probably Friday to Monday or Tuesday of next week, we should be back to record lows. So if you haven't gotten your mortgage application in yet with me, please do it now. Don't wait. Don't procrastinate any further. Let me explain what's going on. Okay, so this is the price of the bonds. Okay, and it's, as I said, as the price of the bonds go up, mortgage rates go lower. So let's invert this thing. So this is going lower. All right, so I locked in probably 95% of our clients right here. This was the lowest rates basically ever in history. Okay, I locked in everybody at that time. From there, rates went up and up and up and up and up. They went from about 3% on the 30-year fixed to about 4.5%. That's how big a move this thing is. Okay, then we started moving back up. And we got back into this range, which was equal to there. So you're thinking, okay, right here, once it got back to here, we're back down to 3% interest rates. And once we got down to here, then we should be at 2.5% 30-year fixed rates. No. Look at a lot of lenders, they're still in the maybe 4 range in here. Doesn't make any sense. Again, let me recap. As this number goes up, rates come down. So if we were right here and the rate was 3, right here, it might be 2.5. It shouldn't be 4 and we were 3 here. That's what's happening today because of all of the mess in the mortgage business between the forbearances and everything else that's taking place. There's been, and go back to my videos in the last few days. This will educate yourself a ton on what's going on in the business. However, now we're starting to see some stability. Look in here, there's not that big a movement, and then the move by the Fed is helping out. I think we're trying to get out the information about forbearances, how people should not take advantage of them, even though it sounds like the best thing since sliced bread. It is not. Read the fine line. Don't get bamboozled in that. I actually did an advertisement today on radio that's going to run all over the place and saying, please don't get bamboozled by the fast-talking mortgage companies. Because there's a potential of you, and I'm not saying this, I mean, if you do the forbearance, what happens is you don't have to make a mortgage payment for say 3 months, 120 days in some cases. What happens then, that next month, you're going to get a bill for all the prior months added up. So let's say your payment's $1,000 a month and you miss 4 months, you're going to get that next bill that you owe $4,000. So it's not going away. So what I was explaining yesterday and on my radio ads is it's a great time to refinance. Why? 3 things say. 1, you can probably almost in all cases get a better rate than you have now, 30-year fixed rate. Okay, that's 1. It's a win-win there. 2, pull out some cash. If you're out of work right now, you know you're going back to work, but you need a nest egg to get you through the next month, 2, 3 months that everything's going to be chaotic. What you don't want to do is start using your credit cards for all your purchases, thinking I'm in a good spot, and then from there think, after 2, 3 months, okay, maybe it's time for me to refinance and take advantage of these historic low rates. Then you go in and all your credit cards are maxed out. Your credit scores stink, and you can't do anything. Or you can do something, but your mortgage rate's going to be that much higher because your credit scores stink. So basically, right now, I'm just saying within the next probably 3 to 4 days, we should be back to historic low rates. So get your applications in now. Last night's video was 20 minutes long. I was told by a few people, try to condense it. That's all I'm going to go over with today. I'm not going to go over the economic data and all that other slew of stuff because it's really unnecessary and somebody's trying to be diligent to get a hold of me. But Stay tuned. Get your mortgage applications in now. Send me your loan estimates. Send me your mortgage statements. Get in all your information so we are ready to lock you in. It's time to lock. So my name is Dan Frio. I do the mortgage update every day. You can hear me also on WYLL radio in Chicago, as well as WIND radio in Chicago. The best way to get me, I'm a mortgage advisor. I've been doing it for 32 years. Give me a call, 844-775-5626. And that's 844-775-LOAN. And one of the best ways to get me to is just shoot me an email at dfrio, and Frio is Frio, at preferredrate.com. Now I'm working on right now, my website's going to be ready in about 5 days, but everybody's asking me, they're like, dude, you don't have a website. I do, but it's under construction. I should have made a landing page because it's taken longer than I thought. So tonight and tomorrow I'm trying to create a landing page just for you to drop into. You can apply, check out some of my previous videos, my radio shows and everything else. But I'd love to help you if I can. So God bless. I will see you tomorrow, same time, same place. Take care. Be safe. Be healthy. Bye-bye.